All right, guys. Now, what if I told you that just $2,000 a year into each of these 5 high growth stocks could have you retired in 15 years? I know it sounds crazy, but in this video, I'm going to show you how these 5 high growth stocks have the potential to have you retired in 15 years and living off of it for 30 years. Now, before we get started, it is a must I tell you that this is not financial advice. I'm just someone that's done research on this and want to make a video for you all. All right, now first, you're wondering, why would we be investing $10,000 a year into these 5 stocks? Well, most importantly, what you need to know is if you invest just $2,000 a year into each one of these stocks, and assuming that you get an average rate of return of 27%, you would have $1.65 million in 15 years. Now, this 1.65 number is really important because what we're doing is using the average American's income, which is $66,000. You would multiply 66,000 times 25 to get your retirement number, which would be 1.65 million. Drawing 4% from that, you can live on that number for 30 years. So that's why we're doing this, guys. And no, this wouldn't be you guys' only investment, but the purpose of this video is to find high growth stocks that could potentially have you retired in 15 years. Now drop a comment down below and let me know what's your dream retirement age. I'm trying to see who's trying to get out of these 9-to-5 races the earliest. So the first stock is going to be NVIDIA, ticker symbol NVDA. Now this company right here is killing it with AI and the semiconductor industry. Basically, this is the backbone of ChatGPT, cloud computing, driving cars, you name it. NVIDIA has their hand in everything. And right now, they have high growth evaluations. All right, so what we have to understand is that we're investing not only for now, but the future as well. By the year 2040, which is 15 years, AI is expected to be bringing in $23 trillion in revenue. As it stands right now, in the year 2024, NVIDIA made $60 billion. They are 1/3 of the $124 billion that AI generated in the year 2024. So if those things were to say the same, if NVIDIA is 1/3 of the $23 trillion AI revenue in 2040, then that means that they would bring in 116 times the $60 billion, which would be a little bit over $7 trillion. Substantial growth for us, which also equals the double-digit growth that we're looking for. So remember, I know that 27% sounds high, but if you're in these high growth stocks that are continuing to go ahead and invest in themselves to try to go ahead and make better products for the future, and they are leading the way, then odds are that these are potentially realistic gains. Now, NVIDIA is up over 1,000% over the last 5 years, and market analysts still expect that through 2040, 15 years, that you will have double-digit growth each year. Now, I will be honest and say that there are going to be some competitors out there, right? And mainly competitors because they're trying to find a cheaper way to do it, but it won't be as efficient. Now, with every company, you will have risks. If you're at the top and you're a big dog in the industry, you're always going to have somebody underneath you that's clawing and trying to scratch their way up to the top. One of these companies could be AMD or even a new AI chip developer. And though I will say this is a risk that can potentially happen, it will be pretty hard for it to happen, at least in the foreseeable future, just because these chips that NVIDIA makes, they work the best with the CUDA platform. Who makes the CUDA platform? NVIDIA. So yes, you can use these chips with other platforms, but they won't have the complexity and high optimization skills that it can have if it were used with CUDA. So therefore, big companies will be pretty reluctant to go to another place if they can't achieve the same level of success that they have with the CUDA platform. Right now, NVIDIA has about a 70 to 95% share of the AI chip market. All right, so next up we have stock number 2. Now this is going to be Microsoft, ticker symbol MSFT. Now, I know you may think of Microsoft as just a software company, but if we're being honest, they've been investing a ton into quantum computing and artificial intelligence. Now, they have a big stake in OpenAI, which is ChatGPT. They've incorporated this into Windows, Office, and Azure. They've also invested billions into quantum computing, which could revolutionize big companies in the future. Now, analysts project that due to AI and cloud computing, that Microsoft's revenue could double over the next 15 years. Last year, they made $230 billion. So that will be $460 billion, which sustains double-digit growth. Now, some risk that I'm going to give with this is the fact that this is actually going to grow a little bit slower than a typical AI startup. Remember, Microsoft has been dominant for a while now. And yes, they are a software company, but they're trying to get integrated into other things. With AI and cloud computing, there are going to be other companies that are trying to dominate this space as well. So in the case that it doesn't, that does mean that this would have slower growth than the potential highest growth possibilities. With that being said, this does offer to be a long-term safe play because Microsoft will be around. And on top of that, it's a well-diversified tech giant. All right, guys, now it's time for the third stock, and that's going to be CrowdStrike. Ticker symbol CRWD. Now with CrowdStrike, they specialize in cybersecurity. Think of as AI and tech grows, so does cybersecurity because you're going to need more of that to help protect companies from getting hacked. Now in 2025, it's expected that cybersecurity crimes will cost us $10.5 trillion. That's up $1 trillion more than the 2024 year, where it was $9.5 trillion in total costs. Now guys, with CrowdStrike, last year they generated $3 billion. This is significant growth, and they're growing faster than their competitors. Matter of fact, the year before that, 2023, they turned around and made $89 million in profit, which was a big deal because they were negative $189 million in 2022. So this steady growth lets us know that this business is not only growing rapidly, but growing rapidly and being profitable, which is key. With cybersecurity threats growing and becoming more and more of a danger and an imminent threat, it's companies like CrowdStrike that will begin to go ahead and benefit and reap from these benefits. As the demand for cybersecurity grows, so will CrowdStrike. Now with cybersecurity for sure getting bigger, I'm thinking that this could at least be a 10x play or more. Like I said, last year with revenue growth growing over 36%, and they have a 97% customer retention rate, I'm viewing this as a great high growth stock. Now with every stock, there is risk, once again. Now with this company, CrowdStrike, you'd have to understand that it's actually not number one, at least in terms of revenue in cybersecurity. It's actually Palo Alto Networks. But though Palo Alto Networks made $7.5 billion last year, CrowdStrike is actually growing at a faster rate and even has a bigger market share at 17% over Palo Alto's 16%. Now I say this, if Palo Alto has grown year over year 23% the past 5 years, and then CrowdStrike is growing faster than that, that leads us up to reap even bigger gains than 23% year on year, which sets you up for that 15-year retirement goal. Now, if you've made it this far, drop a comment down below and let me know what's your favorite of the 3 stocks that you heard so far. Now we have the 4th stock. Now that's going to be Zscaler, ticker symbol ZS. Now this company is also a cybersecurity giant, but instead of the traditional firewalls, they actually use a cloud security zero trust method, okay? And they created this. This company is actually leading the way in cloud security movement with an annual growth rate of 23%. Now this is huge because as businesses start to move onto the cloud, they're going to need more security. All right, now it is important to know with Zscaler, their annual revenue for the year of 2024 was $2.1 billion. Now that was up over 34% from the year before. Also, they cut losses by 72%. So the total losses was around 57 million. Now with them having a loss of 140 million the year before and being able to cut that down to only a $57 million loss this past year, we can see that they are well trending on their way to being a profitable business, especially as once again, cloud business starts to boom. There will be more and more companies that start having cloud-based services, and they will need the security for this, which, like I said before, Zscaler is leading the way in this zero trust method. Now, of course, I have to tell you the risk with Zscaler. And one of the biggest risks is that it actually has a competitor called Microsoft. Now, lucky for you, it's actually stock number 2. But in the case that it doesn't do well, we have Zscaler here who is leading the way in cloud-based security. Now, as AI and tech develops, we will have more cloud-based companies. It's okay for Microsoft or Zscaler to both have shares in this, especially if we're invested in them. The main thing is that we want to go ahead and make sure we continue to see this 23% year-on-year growth. All right, guys, we have stock number 5. And this is going to be IonQ. Ticker symbol is IONQ. And this is a big quantitative computing play. We are in the early stages of this, so this could actually be a potential 100x play over 15 years. Now, this company has gone ahead and started partnering with Microsoft, Google, and Amazon already to build next-gen compute. Now, quantitative computing could actually change the way security, AI, and healthcare works forever. Now think of it like this. Quantitative computing is still in the early phases. As quantitative computing grows, so will IonQ, because IonQ is the leader in that space as of this moment, even though it is still relatively small. They've had a compound annual growth rate of over 89%, and they're expected to have a revenue of 150 million soon. So guys, that's what makes this the potential to potentially be a 100x play. Now, the risk with IonQ. This is an early stage company, so this is a purely speculative play. We don't know where quantitative computing is going or if it will truly be as successful as we hope. With that being said, they are the leader in this space. So once again, this is a speculative play because we expect them to lead the way into massive growth and wealth. Either way, that's why you have the 4 other companies. These are 5 companies that, if projections do well over the next 15 years, can help lead you into a stage of early retirement. All right, guys, so now you see how investing $10,000 a year into these 5 companies could actually help you retire in 15 years. Let me know in the comments, what is your favorite company to invest in? If it's one of these or something additional, I'd love to hear what you guys think about this. Now, if you enjoyed this video, like, comment, and subscribe. Matter of fact, turn on the notifications so you won't miss more investing videos like these. Until next time, I'm Marcus, and you're here on Zero to Wealth. Peace.